China is in the spotlight once more with news of a slowdown in economic growth in the third quarter. The world's second largest economy grew by 6.9% compared to 7% in the previous quarter. It's the lowest rate since the 6.2% recorded in 2009 during the global recession, and this despite several stimulus measures from the government. So what are the options before Beijing? Joining us this evening is the Deputy Director at the Center for Strategic and International Studies, Scott Kennedy, joining us from Washington. Scott, appreciate you joining us here on India Business Hour. Let me start by asking you, even though the quarterly numbers were more or less along expected lines, concerns only seem to be mounting for China. Has the worst now been confirmed for China?
Well, I think actually there's something in here for everybody. For those who are really worried about the Chinese economy, yes, there are data that show a continued slowdown in the numbers, particularly in industry. I think probably for me some of the most concerning data has to do with that private investment has registered the slowest growth in 6 to 7 years. And the other is that real GNP was larger than nominal GNP, which means that there's deflation that's still affecting the economy, and this is really a bad sign that demand is still quite low. On the other side, you could see positive numbers in the transition to services and consumption for those who are showing that who want to argue that the economy is transitioning toward a different growth model. So there's that data too, but I think on balance, these aren't numbers to sing about.
Certainly not numbers to sing about, but it's important you talked about private investments being at a 6-year low, Scott, because China has been trying to restructure its economy away from an export-led model to focus more on domestic consumption. But if you look at the data from passenger vehicle sales, for instance, last month, only 1%. Even smartphone sales growth is projected to grow at just 1.2%, as against 20% in 2014. Would you then say that the restructuring efforts are not working today?
I would. In the third quarter, services accounted for just over 50% of the economy, about 51%, which for some shows a big transition. But a huge part of that growth in services is financial investment from the stock market. And if you look at turnover in the stock market over the summer, in July and August in the third quarter, it was quite massive because of the concerns there. So that's really not the type of growth in services that you want to bank on for restructuring the economy overall. So I think what you need to do is wait to see what the full year numbers are to tell you whether services are really playing a much more important constructive role in the economy.
But let's flip that argument, Scott, because the other camp says that when an economy of the size of China tries to reorient itself, it's only natural that there will be a gestation period. Hence, there's no need to panic just yet, and everything will perhaps come back to a degree of normalcy in the coming few years.
Well, all things being equal, it would be lovely if we had the time to wait and look at that transition, but they aren't. China has a significant debt problem built up because of an investment-oriented economy, particularly as they invested $4 trillion to stimulate the economy to avoid the problems of the global financial crisis. And that brought short-term benefits, lots of growth, but it also brought on ghost cities and significant debt in Chinese companies and banks. And so the transition, China still needs to generate significant enough growth to generate income to pay down that debt. And if they don't, the transition toward services and consumption isn't going to be enough to save the economy. So they've got to work on both growth and reform at the same time.
Scott, my final question to you today. 80% of the total stock market valuation in China comes from state-owned enterprises. Do you see Xi Jinping loosening the grip as far as the government is concerned? Because that is going to be a big political challenge. Do you see that purely as an economic challenge?
Yes. I mean, I would say trying to manage China's economy is no easy task with a population of 1.4 billion. with cities as advanced as Shanghai and Beijing and other places where per capita income is still quite low. And global markets slowing down. But the political challenge is, which they pointed to, is these, can they liberalize in services, healthcare, education, financial services, and telecom, which would redound with some significant growth over a number of years, or are they worried about protecting the companies that are state-owned in these sectors because the competition would bring them down? So that's a political and economic challenge. And Xi Jinping has shown himself tougher than most leaders. So if anyone is going to do it, it ought to be him.
Scott Kennedy, appreciate you joining us there from Washington, D.C. on the China conundrum. But